The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. Yes, we have some major indices trading significantly to the downside today. That's okay. Got a lot of things we can look at. Got a chart up there for you of the IWM. And I noticed something that I was looking at earlier this morning. Our friend here, Dave Fry, who's the editor of the ETF Digest. Now, he posted something early this morning before this whole downside trade got underway today about the IWM. And Dave is a terrific analyst of ETFs. He was talking about the fact that maybe some of these gains in the small caps could be reflective of some expectation for further QE3. Then, of course, we had this big downside this morning that happened. But nonetheless, what he was talking about, what he was really referring to is something that I've talked about quite a bit on the show, and when I do the guest spots on Tom's show sometimes in the afternoons on Tuesdays and Thursdays, we'll talk about the fact that you frequently have the smaller caps are some of the big movers ahead of some kind of trend that gets underway. The most recent example where that was illustrated in a big way was March 2009, when you saw a lot of those smaller cap names were some of those early leaders before the general indexes did move out of that bear market. Okay, so that was a very clear indication. I mean, I remember back then you had some of these crazy names, some of these small cap Chinese names that were big at the time. And yes, many of them have been delisted. Doesn't mean you couldn't have ridden them higher, because there were technical signals that that run-up was ending, that there could have been some trouble afoot. Nonetheless, and there were some U.S.-based and other small caps based in other countries as well. It wasn't just the Chinese names back then. But back to Dave's point here, that just some of this movement that he was seeing in the IWM could have indicated some anticipation about what might get announced at Jackson Hole tomorrow. So just something interesting to think about there. So what we have here today, wanted just to take a look at some of the retailers in particular are making some moves today. One that I was noticing here, I'll clear my throat there, apologies. Okay, here is Vera Bradley, VRA. And, of course, it's the boutique retailer. A lot of you may be familiar with this. A lot of you may not be. I'm certainly familiar with it. This is one that went public not all that long ago. It is in that range of the recent IPOs that I like to look at. Went public in October 2010. Had a big run-up initially. And I've got that for you on a daily chart up there on Tiger TV. Let me put this up here on a weekly. And then you can see we're not, okay, there you see kind of the tail end of 2010 back here, and you can see some of that run up. So you can see it did have a nice rally there in the later part of 2010, then fell into this correction, the big correction that most stocks suffered from in the summer of 2011, and really just has never rallied back the way many did. Now, this is a small cap. Has a market cap of about $886 million. some okay liquidity. However, it moves about 643,000 shares a day. But you got to realize on this particular stock, over the past few months, when it's had volume spikes, that's been to the downside. So, and again, I know a lot of folks are saying, well, you look at something like this and think, should this be shorted? This thing, maybe it has some room to move to the downside a little more, but then again, you never really know when the bargain shoppers are going to come in and be scooping up shares. Let me just see here where it is relative to some of these moving averages. I don't like to spend a whole lot of time on these losing stocks, but it is one that is a big mover today. It reported some disappointing second quarter earnings and also was the recipient of some analyst downgrades. I love when these analysts come in and downgrade a stock after the fact. I just always get a kick out of that. You see that a lot, and you have to wonder, what exactly are these analysts doing? They're watching the same news the rest of us are, and they come in there and they downgrade a stock. So let's see here. So this one is trading below all its moving averages, although it is rebounding a little bit today, intraday, so it does look like some of the bargain shoppers maybe did come in there at the lows already. I just don't like any potential for any kind of trade in this one whatsoever. Now, the interesting thing is about this one, the earnings missed, but the revenue has been pretty good. There could be some long potential in this one. I wouldn't say just yet. I'd want to see the moving averages. I'd want to see that situation improve. I'd like to see the stock regain some of those shorter-term moving averages as well. Let me see here. Let me put this up here on a daily for you and show you something else I really don't like, but you might want to watch to see this improve. So you see the blue line down here, if you're watching on Tiger TV, your 50-day moving average well below your 200-day. So let me tell you why you might want to watch for some kind of bullish moving average crossover on something like this, because the fundamental case is actually not really that bad. The company has reported excellent revenue growth in every quarter over the past 2 years. We are seeing that analysts are eyeing, and again, the analysts, and I realize I just kind of mocked them a little bit here, but there is something to be said for looking at some of these earnings forecasts, and the reason being, it shows you the degree of institutional confidence in a company. They can be wrong just as much to the downside as to the upside. In other words, they can underestimate. Oh wait, that's misunderestimate. They can underestimate some of the earnings as much as they can overestimate. Okay, so it can be wrong in either direction. However, it does give you a clue as to the level of some of the institutional confidence in any stock at any given time. So for 2013, the analysts expect 17% earnings growth to $1.68 per share, 18% earnings growth in fiscal 2014 to $1.98 per share. And this company has been profitable. So I'm just saying there are some things here in the fundamental case. You may want to kind of put this one a little bit on the back burner. Certainly not one of these that I would be actively tracking at this point. But if the fundamentals do pan out or beat views, you might see that moving average, the shorter-term moving average cross over the longer term. And, in fact, that could happen even before you do see the earnings. So that's just one that I was noticing that was moving today. We've got quite a bit here on the retail side that is moving. Let's take a look. Here's another one moving to the downside. And let's see here. RBA, Ritchie Brothers. Now, this is one probably a lot of folks may not be familiar with. This is a Canadian company, and they auction trucks and heavy equipment. Now, this is interesting just because, again, it's another one of these names you're seeing some of the big gap down there. You can see that right there on the chart that's going on. A lot of poor action in this one, and I'm not, I don't even want to spend any time on this because there's just not much redeeming on this particular stock at this particular time. As is the case with Vera Bradley, you do see excellent earnings estimates for the next couple of years, although they have been revised downward. And we've seen some of the earnings growth and revenue growth turn around a little bit here. But nonetheless, let me just see here. A lot of times what I will do is I really tend to follow a lot of what's going on the chart, much more so than what is going on in the news on a particular company. It's the chart that catches my attention first. And I know that's kind of the reverse of what a lot of stock analysts tend to do. They're following the fundamentals in the news. Now, I noticed that this had a number of downgrades recently, earlier this month, so that has pushed the stock lower. But in any case, this is a really good example. It's the kind of thing that when you see something like this happening, a lot of people like to know what's going on with something. They want to, I get a lot of questions when I show some of these. People are wondering, well, what happened here? You know what? On some level, especially when a stock is trading lower like this, it almost, it doesn't matter. That kind of analysis is not as important. When a stock is moving higher, then it becomes more important because you want to know, okay, is there something here in the sales of the company's product, its services, something in its business model? Is it expanding its market? There's something going on of a positive nature that makes you want to get in on something like this. So just showing you a couple of the movers today. One more large cap. We're going to get to some of the small caps, but just interesting large cap mover today. You've got Amazon from the retail sector. A lot of these companies that are retail related are some of the big movers today. And if you've been following, again, here I did check out the news, and it was big headline news. It's Amazon. It's going to make the headlines. Was the news about the Kindle Fire. And actually, let me see here. That was trading higher a little bit earlier. Let me just see what our most recent price on Amazon is today. No, it's down about 0.2%. So very, very, very small decline as of now. But they did have some news earlier today about the Kindle Fire being sold out. Okay, stick around because later in the show we have a terrific guest, a repeat guest, Tom Lamming, who is a fund manager of the Scout Small Cap Fund. And you're going to want to hear what Tom has to say. He's a terrific stock picker, has a lot of great ideas, companies that maybe are not some of these Amazon-like companies. Well, of course not. They're small caps, so they're not going to be the ones in the headlines. But he can give you some great ideas, kind of like I was saying, about analyzing the business prospects for some of these companies that are moving higher. You can also give me a call, 877-927-6648, and we'll be right back after these messages.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right. Welcome back. We're going to take a look at a couple more retailers here on the break there. I was just kind of, because I hadn't been seeing any news about that Ritchie Brothers, and I know, we all get curious about it. Like I said, when you see a stock moving down, let me get this in the right box here. There it is. Okay. So when you see a stock doing all of this, you typically wonder what the heck is going on. The back here was a big downgrade. That happened. And, the only news I'm seeing today on this is that in Houston, a disgruntled employee plowed a bulldozer into the company's headquarters. So that's what happened. They said it was, let me see here, about $1.5 million in damage. Let's see, a disgruntled employee, 52 years old. This happened Monday night, so a few days ago. Hopped into a bulldozer, smashed through a chain link fence, then barreled the dozer into the empty office building, causing $1.5 million worth of damage. So I don't know. I don't know why. I mean, this news broke last night, looks like, but it happened on Monday. So I don't think that would send the stock down like this. But in any case, just kind of looking up some things here. Somebody's obviously selling, and I don't think a disgruntled employee in a bulldozer would necessarily do this kind of damage to the stock. So And you know what? I'm going to move on because I don't really care that much about the stock. I was just kind of curious about what's going on. Let's move on to one that I do care a lot more about. We talk about this one. I feel like almost every show we talk about this one right now, and with good reason. This is Michael Kors, Kors, if you were listening the other day, and we did have asset manager Keir McDonough was on the show, and he was talking about Kors. And when I fill in for Tom sometimes, and we have my friend Ken Hoover from IBD on the show, he talks about this one. You know, this has just gone like gangbusters after its earnings report. It kind of, let me put this back up here on a weekly chart for you. And there we go. So we just take a look at, you know, it was kind of mired in a bit of a consolidation, had a little bit of a tough time getting out of there. But after this, since that earnings report happened, this thing has just been a winner. Now, this is one of these cases where it had a lot going for it in terms of making it a very viable watch list candidate. It's in the mid-cap zone, so it's not something that we've been featuring in the Low Price Leaders newsletter. I just want to say it is out of our market cap range. But nonetheless, it was coming up on some of my screens because it is one of these names that has the characteristics that I'm going to be looking for. It's a new company, made its IPO, let me see here, just back in December of 2011. So yeah, so you're seeing right over here, all the way over on the left side of the chart, you can see what it did, had its typical little post-IPO pullback here, would have offered a buy opportunity, rallied higher. Now another thing, in addition to the fact that it's such a new stock, I just really, really liked the fundamental case for this one all along. It had shown some fantastic earnings growth in recent quarters, exactly the kind of explosive levels you want to see. Double-digit and triple-digit growth in almost all of the recent quarters. It did have one quarter that was an exception to that. Not unusual to see newer companies putting their money back into growth, so you do sometimes see that. I think, let me see here, one quarter it did show the quarter ended in March of 11, so a while back. It showed a year-over-year decline, but revenue grew at a rate of 50% during that quarter. So this is in growth mode. They're expanding around the world. A lot of their business tends to be done. This is in the luxury sector. A lot of their business done in Asia. So just really liking this stock. So that's kind of just, I know we've talked about this one a lot, and I don't own this right now. I'm not a cheerleader for it. I'm just saying that this has a lot of the characteristics that you want to look at in terms of what makes a leading stock and one that is a good watch list candidate. Right now, I'll tell you what I would look for at this one right now. It is trading about 1.5% above its 5-day moving average. It rallied to an all-time high a couple days ago. You want to see some more short-term moving average support. That's something I talk about a lot in the Low Price Leaders newsletter. Just went out yesterday. Looking for these companies where their stock makes a pullback to that short-term moving average, that could offer you a new buy opportunity as long as everything else is solid. Stick around. We have fund manager Tom Lamming after the break, and you're not going to want to miss him.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right. Welcome back. This is the Small Cap Roundup. And as I promised before the break there, we do have a terrific guest, a repeat guest with us for the next few minutes here. Tom Lamming is the lead portfolio manager for the Scout Small Cap Fund, and the ticker on there, if you want to follow along at home, UMBHX. So you can check that out. Now, Tom, you and I have talked before. We talked a couple weeks ago, and I know one of the things that you were watching out for was some of this volatility that's been going on. Tell us what you're seeing now.
Okay, Kate, it's great to be with you. Volatility is still very low. It's ticked back up in the last few days, but a couple weeks ago we were at multi-year lows, and that just, I think, is an indication of a few things. One is that there's a lot of cash on the sideline. A lot of people have exited the market and never got back in. Some are just sitting on large portions of cash, and that's kept trading activity down. I think there's almost been there was a bit of a sell in May, and people haven't come back, and they're waiting on a number of things, a fiscal cliff, risk out of the Middle East and so forth. So I think on a short-term basis, what it really means is when you get low volatility, I think you get to some extent some complacency. If there's the slightest bit of an exogenous shock, say something happens between Israel and Iran, we could be in for quite a a negative move in the market. But I think in the long term, it's really not that important. A longer term, focused investor probably doesn't need to worry about it, but somebody that trades a lot probably does.
Yeah, good point. And a lot of our listeners are very active traders. So that's a very good little word of caution for some of the folks who are listening to this. You mentioned there some of these news items, the exogenous factors that could play a role in moving some of the markets. You've got the fiscal cliff that everybody's talking about. What are you seeing in terms of some of the macro risk factors we might be facing?
Well, the biggest one that bothers me, and this is really both short and long term, is the component of the fiscal cliff that people talk so much about. And there's two components to that. One is the automatic spending cuts. I think that's okay. I think you're really talking about whether there's taking money out of one taxpayer's pocket and putting it in another doesn't really help grow the economy. If we cut some spending, that probably is not going to change things overall. There might be some individual companies that are hurt. But the part that's impacts everybody and essentially every stock, every financial asset, is the increase in taxes that is coming. And so for some taxpayers, there'll be more than a tripling of the tax on dividends starting January 1. And in fact, all capital gains, whether it's on homes or stocks, those tax rates are going up as well. And even if there is some progress on a negotiated agreement between both sides of Washington, we still have the 3.8%, in effect, excise tax. It's a result of the Affordable Health Care Plan, Obamacare. And so the one thing I do know for sure is that on the after-tax value of whether it's a dividend-paying stock or just the stock price itself, which ultimately is affected by capital gains tax, is going to be lowered. I spent a little bit of time this morning trying to sort out a little bit more how much of that's in the stocks. Clearly, the knowledge that's coming is probably priced in to some degree, although it might get renegotiated out. But I noticed on a year-to-date basis, the S&P 500, which is total return, is up over 13%. Yet the SDY, the ETF that focuses on dividend-paying companies, yields much more than the S&P 500, is only up about half as much. And so that tells me that maybe the market is baking in, some of it is in the market, that these dividend-paying returns aren't, on an after-tax basis, simply aren't going to be as good as they used to be. And I'm worried that not all that's in the market. And so we'll see as the year goes by.
Let's talk then about the general market. We kind of obviously, as we're speaking today, we're seeing some selling, but that kind of goes back and forth. We had a nice rally there for a while that does seem to be weakening a little bit. I don't normally like to talk about forecasts here, but just in terms of how you're interpreting the current action.
Well, on a near-term basis, I think it does get back to that volatility number got so low. I don't focus on technical analysis, but I do look at the volatility number relative to what future returns might be on the market. Because historically, I think the best time, it's pretty easy to put up a chart of the S&P 500 and a chart of the VIX, and look and see that a good time to buy typically is when volatility was very high. That's when everybody's throwing stocks out. That's one reason volatility gets so high, and there's some reversion to the mean in terms of stock prices. When volatility is very low, that doesn't mean you automatically sell, because it can go low and stay low for a long time, like it did throughout the 90s. So I think the market's just very susceptible to any the least bit of negative news. We've had a little bit today, the economic news that came out this morning that wasn't so great. I wouldn't worry too much about that. I think I would probably just stay focused more on the longer-term picture. I think it's a little easier to predict from that. And, we're at 30-year lows on interest rates, and, the market trading at about 12 times next year's earnings just doesn't look that expensive. And so I think relative to bonds, it really speaks in favor of equities. Now, that being said, we know where all the flow of new money is gone, and it's going continually into bonds as people continue to remove risk and they continue to take money out of stocks. And so I think that kind of is something that does set up a better environment for equities. And so, we're just in the kind of noisy part of that with a down day today.
Right, and then of course we've got the anticipation about Jackson Hole coming up, and that could result in some big moves too.
I think it's become, investors are very mixed as to what to root for. I think the one thing you can always root for is you want higher earnings. Ultimately, that's the real thing that stocks follow. But, whether you go to one investor or another and ask them, do they hope there's some quantitative easing that comes out of, or at least, some likelihood of it that comes out of the Jackson Hole meeting, I think there's some people say, yes, I would welcome that. I think there's other people say, no, it's not worked, and it's just setting up potential problems down the road. We don't want it. I don't even think the market participants know what they want anymore with respect to Fed activity.
Mm-hmm. Well, you kind of alluded to some of these specific stocks, and I know you always have some very interesting names to talk about, so let's get to that. What are some names that you like right now, Tom?
Well, we try to focus on, trends that are going to take place regardless of whether, what comes out of Jackson Hole. So, and those types of events, we try to focus on longer-term drivers, and so that are just kind of seismic shifts within technology or business practices, consumer practices, and so forth. So LSI Logic, or LSI Corporation, the old name of the company, LSI Logic, kind of takes it back to when it was purely a semiconductor company making its own semiconductors. Now it's a fabless company. It doesn't have its own manufacturing. It really is a design company that makes hardware and software that really solve kind of at the intersection of two really strongly growing trends. One is the growth in data network traffic, and the second being the need to store more digital information. So drivers of that, by example, are I'm sure a lot of your listeners will be very sensitive to this if they're on Facebook. Facebook receives about 250 million photos per day that people upload. Birthday parties and embarrassing events too, I'm sure. And
cats, lots of cat pictures.
And those are out there. So extra tip: be careful of those pictures. But that corresponds to about 3,000 photos per second, and that's a tremendous storage need at Facebook. And you can actually they're very open sourced about how they design their data networks. You can find that online, and we've gone through that and actually identified LSI as being even part of their reference design for their storage system. And so, but other drivers of those trends are YouTube, the video site accounts now for about 10% of internet traffic, and so video bandwidth is, or video is a very large bandwidth hog. And then finally, the ubiquity of wireless networks. You can't go to any fast food restaurant or airport, virtually anywhere, where somebody doesn't give you access to a wireless network. So when you look at the interaction of both the digital nature of this information and the need to store it and analyze it, we think it really favors a company like LSI. And I think last time we spoke, I mentioned Tibco Software. That's more on the analysis part. What do you do with that data? How do you search it, and how do you give those results back to a customer? They're focused in that market as well. And then we own a company called Fusion.io that is also involved in the speeding up of the access and storage of that data. So we think those companies are well positioned.
Yeah, these companies are always fascinating to me just because, as you said, you have the consumer-facing Facebooks and YouTubes of the world, but then you have all the infrastructure that goes behind these. I want to move on because I know you've got a few other names you can talk about today, and we've got about 4 minutes left here in this segment. So tell us some other ones that you like right now, Tom.
Sure. Totally different market, shifting gears here, but we like the longer-term demographics of the cruise industry. Typical person on a cruise is in their 50s, first cruise is in their 50s, and kind of goes up from there. Steiner Leisure provides spa services. If you've been on a cruise and went to a spa, it's a very good chance it was the service was provided by Steiner. So they don't own the ships, but they run the spas, and they're on about 150 ships, all the ones that you would typically think of, from Carnival, which owns Holland America, Princess, and Cunard, to Royal Caribbean that owns Celebrity. Very high return on invested capital, and so a very profitable business, and we don't see that changing anytime soon. And the stock's been hurt by weakness in Europe, and so we think that makes it much more opportune.
Oh, that's interesting. Okay, yeah, because I'm looking at the chart right now, and I'm seeing the chart. The price has declined, but the estimates are still good for the next 2 years.
Yeah, the business hasn't been that bad, and they continue to pick up new business, and so we think it's a good time. It's been one that's done very, very well over the years, so we think this is probably a better time for purchase.
Interesting. Yeah, I love these names that you wouldn't typically think about. Again, this is kind of one of those hidden names. You think about the cruise lines, but not the companies that are vendors to the cruise lines. So another
exactly.
Interesting one there. So Tom, you've got a couple more. We've got a couple more minutes here.
Okay. Another one kind of back in the more tech or really more now industrial area is a company called 26. Now its symbol is the Roman numeral 2, the Roman numeral 6, IIVI. The name's kind of interesting. It comes from the heritage of the company, where its main expertise a few decades ago was really marrying materials out of column 2 and column 6 of the periodic chart, which really sounds exciting, I'm sure. But, so they're really good at bringing together things like cadmium and telluride, or zinc and selenide, or zinc and sulfide. And these are materials that are used in a number of obviously high-tech applications, much to do with the production of lasers, various optoelectric solutions for the military, for industrial. A lot of these lasers get used in place of traditional welding, using lasers to do welding or cutting of metal. And then finally, things that you would notice in a car that has a seat cooler or a seat heater. Those are typical thermoelectric effect devices that 26 makes. And so we think they're just well positioned, really, from a defensive standpoint. A lot of barriers to entry to this business. And then also it's just kind of some under-the-radar growth that we think will continue to play out. It's done quite well for them over time.
What has caused the big decline in the last couple months in this price?
A lot of it's tied back to the end markets, even though this is at its roots a pure technology company, but it sells to industrial markets. And so, where we've had a relatively weak economy, kind of this jobless recovery that we read so much about, but on the manufacturing side has been much more difficult. And the company is selling a lot of products that go into those manufacturers. So think of very high tech, doing something as low tech as welding. And so that's definitely hurt the company. But the long term, one of the trends here is replacing traditional welding with lasers. So we think there's an extra growth rate there that won't be impacted anytime soon.
Well, great ideas today, Tom, and great perspective on where you're seeing the market heading. Always enjoy talking to you. We'll have to have you back again sometime. Thanks so much.
Great being with you, Kate.
All right, everybody, stick around. We've got one more segment of today's Small Cap Roundup. You have time to give a call. We're at 877-927-6648. Thanks again to Tom Lamming, and we will be right back in just a few minutes.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, want to thank our guest, Tom Lamming. Always interesting to hear from the fund managers because, you know, a good deal of the time they do have a very different perspective than we have as smaller cap traders. But it is their buying that props up a stock, that keeps it at new highs or propels it to new highs, I should really say. So you want to watch what they're doing and understand what it is behind their analysis of a company. So I put up a chart there. Let's take a look at a couple of some of these retail names that are rallying today. We saw some retail sector names that were not doing so well today. This is Zumiez, ZUMZ. Some of you may know this if you spend any time in malls whatsoever, which I try not to do. But this is a youth-oriented clothing chain. And the stock has been, as you can see there very easily, it's been a laggard. It's up it's up 4.4% today, $1.39 to $32.96 thus far. And what we're seeing here is some back-to-school sales. This is a youth-oriented chain, so back-to-school sales have been boosting this one. You know, this has done a few stints as a price leader and as an earnings growth leader as well. it's been profitable for many years now. Did see a big year-over-year earnings decline in 2010, but it's been rebounding since then. For 2013, analysts are seeing 35% earnings growth, another 14%. In 2014, you've had some general acceleration in the revenue growth trends in recent quarters. So Zumiez looking pretty good right now. Let me just talk a little bit here about, in terms of where it is relative to some of the key moving averages. It's also not bad. It's a little bit above its 5-day, although you do have the 15-day above the 5-day. So watch for that crossover to occur. Watch for the 5-day line to cross above the 15-day exponential line, and you may have yourselves a bit of a buy opportunity in this one coming up. One that I may well be tracking. Let me just see here. The market cap of this one, a little over $1 billion. So yeah, this is definitely in our wheelhouse there in the small cap and low price leaders. Market cap of $1 billion. I just said that. 436,000 shares a day traded on average. Want to remind you, check out the Low Price Leaders newsletter on the homepage of TFNN.com. We are currently still at that introductory rate. You can also take a free trial. We are looking at the small cap names starting with a market cap of between about $250 million and $2 billion. And we're not going to just sell them because they rally out of that market cap. That can just be a very good place to get into these. We also look at some lower price names, those trading between $5 and $12 a share. We're always looking for liquidity, always looking for strong fundamentals. Very, very picky about the names we look for in these lists. So take a look at that also on the homepage of TFNN.com. There is the report, the free report on recent IPOs. We've talked about a couple of those, just to give you a little bit of a sense of how some of these newer companies can be some of the market leaders. We started out the show today looking at Kors, K-O-R-S. That's a terrific example of one of these recent IPOs. And even Zumiez that we're just looking here. Let's see. Zumiez went public in 2005. That still qualifies in my book as a recent company, having recently gone public less than 10 years ago. So, in any case, that is a wrap on the show today. Thank you for listening. Check out the Low Price Leaders on the homepage of TFNN.com. Have a great weekend. I will be back here on Tuesday with more Small Caps.